Trading or investing? How to make money in the market? Which method is better? A typical question from a beginner who has just recently started to take an interest in stock trading, and for now doesn't know where to even start. Although investments and market speculation can be compared to two drops of water, they are very similar in many ways, but there are still differences. They are different drops, friends. Each approach has its own specifics, its own advantages, pros and cons, which I will be telling you about today. As a practicing trader, I have my own investment portfolio, so I fully understand what I'm talking about. Today, I will be telling you about the differences between types of market participants, and will show you in detail the pros and cons of different approaches. Along the way, I will trade and try to boost my deposit right before your eyes. Let's get started. First, I want to show you today's trading strategy that I will be using. Two indicators. This is the Donchian channel with a period of 18. It will serve as my main marker. I will make decisions based on it, and along with it, the shaft trend cycle as an oscillator and as a filter. You can also see its settings on your screen. This is a rather primitive strategy, without any special frills. But as we all know, sometimes everything genius is quite simple, my friends. Now I will show you the principle of our trade entries. First and foremost, I will focus on the Donchian channel. We will react to bounces off its boundaries, as well as breakouts of the lines and the central line. As you can see, there are quite a lot of such situations. On the chart, therefore, I am sure that we are in for an active session full of interesting trades. So the oscillator, as I mentioned, will serve as a filter. Well, we are ready to trade. Let's move on to finding the first entry point into the market. Well, wonderful. The first trade on currency pair Canadian dollar, Japanese yen. I am opening a long position after breaking through the upper boundary of the Donchian channel. A simple entry point requires absolutely no explanations, so I'll immediately start telling you about trading and investments. First of all, of course, let's define these concepts. Trading is short-term or medium-term trading on financial assets with the aim of making a profit from price changes accordingly. In other words, we earn from changes in the price and value of an asset on the volatility of such traders like us, who can be called traders. That's us, friends, or stock speculators, which in essence is basically the same thing. This method is most popular, let's say, among those who want to get their results here and now. And we choose the assets that we will analyze based on the opportunity. Yes, that is our analysis and our experience. We basically don't care what will happen in a year or what will happen in a month. The main task is to open a position at the right time, just as I am doing now. Excellent. The first trade is in profit. This chart shows potential for another trade for growth. So for now, we stay here and assess the opportunities. Next, now about investors, friends. Basically, investors use the same tools as we do. Investing implies a long-term allocation of funds into various assets, also with the aim of generating income, only after a long period of time. Investors do not care about the current situation, about short-term movements, prices here and now. At the moment, their task is to gain their benefit in the long term. Only this way and no other. No other way. Some investors hold their positions for years, patiently waiting for their profit, and go through many stages of price growth and decline, but these do not matter to them. They are focused solely on the future. Another trade for an increase after a small pullback. Let me give a brief explanation here regarding the chart. Yes, there was an entry on the red candle, but look at its lower shadow. This is by no means a doji, not a reversal pattern. It's a buyback in the form of a hammer. Therefore, in this case, given the current volatility, further growth is to be expected. So, an important thought, friends, right now, for beginners who have just recently been introduced to investing and trading, one is not necessarily better than the other. These are very similar approaches that pursue the same goal of simply making money. And online, you can find a huge number of battles, debates, people who prove their point, which to me is a big foolishness. Why discuss and criticize something that has existed for 100 years just because you don't use it? Both trading and investing have the right to exist if you are making money from it. The second trade closes in profit. I also see potential for further growth in this currency pair, although let's observe. If there is a pullback, now we will open a position for a decrease. since there might be a reversal towards the central line of the Donchian channel. If the market provides opportunities in general, they should be taken advantage of. So, now about investments. There are two types of market participants who use this method. The first simply open long-term assets. As I already mentioned, they earn their profit when the price, let's say, covers the necessary distance. And the second group acts differently. Many of them invest in securities. Profit is generated from price increases and dividends received over time from the investments. In other words, such people also have passive income. Now, I'll explain how. So friends, there is a pullback. Let's probably open a trade for a decrease towards the central line of the Donchian channel. Perhaps a small red candle will appear on the chart now, but it opened right at the start of the minute, so that will be enough. And that will be sufficient to be more precise. So, many investors buy stocks and bonds specifically to accumulate and grow their capital, as well as to receive dividends. In this way, they kill two birds with one stone. That is, the investor accumulates capital, prevents it from being eroded by inflation due to the market growth of the asset itself, and also receives bonuses in the form of its payments as a holder of securities. Of course, the returns on such investments will be lower compared to trading. This is also related to the fact that an investor makes far fewer transactions than a speculator, like us now. But the risk, of course, is lower in that case because the long-term growth of stocks is almost inevitable. That is, the trend is always upward, so there's no need to worry. So friends, it's a close call, but our trade is in profit. Wonderful. Let's probably change the currency pair and continue with others. Excellent. Euro Canadian dollar, I'm opening a trade for a decrease, also based on the breakout of the central line of the Donchian channel, and I will probably continue about investing. Look, this method is suitable for those stock market participants who aim to travel quietly and for a longer time. They are not in a hurry in principle and are ready to build their capital here over the years, so to speak. But at the same time, large investments are needed. The advantage of such investments is also the possibility of gradual growth and almost complete tolerance, so to speak, to losses. That is, if you bought an unsuccessful set of stocks, let them sit. Sooner or later, they will grow. If the market falls, you need to buy more. If the price averages out, you can also buy more in principle, yes, meaning you can gather more stocks here at roughly the same price. The investor is not so much catching moments as steadily buying and waiting for their long-term goal. In practice, it is almost impossible to drive him out of the market. He is a holder, of stocks, not a speculator. For the deal is behind us. Great. Let's move on to finding a new entry point. Let's try to make a profit here. Australian dollar, Japanese yen. I'm opening a trade for an increase. Now I will show you the logic of my analysis. After another decline, we observe a rebound in the price upwards. And the lower shadows give us clear signals that there is resistance from the buyers. And the market strength begins to shift towards growth. Therefore, we will wait for it. Now I want to tell you about trading and its advantages. In my opinion, it is of course a more complex approach. We definitely invest more time and effort and more potential and more rewards. Isn't that right? That is, in trading, there is a constant battle with the market in real time. We must pay attention to the most insignificant fluctuations, monitor indicator readings, assess current volatility, and much more, as well as control emotions. Our main task is to enter a position neither too early nor too late, but precisely at the moment when it is necessary to do so in order to make a profit. Exactly. How does one manage to do this? I have right now a wonderful trade. $159 in the balance. Let's continue with other pairs. Friends, British pound, Japanese yen. Also based on the breakout of the Donchian central channel, I will open a long position. Let's return to discussing our topic. Many might ask, why do all this at all? Why delve into it? Why take risks in trading? Why spend a lot of time, trade daily, if you can just invest and wait steadily for profits? It's all about the income here. What an investor earns over years, a good trader can achieve in just a day. And that's if he really knows his business well. Long-term investments are almost a guaranteed peaceful retirement, a cushion, financial security for the future, but it takes decades to build. In a way, we are playing Russian roulette for $1 million. But with the right approach, you can discreetly remove the bullet from the revolver and make your money. Unfortunately, of course, not everyone succeeds because experience is needed, as I already mentioned. Friends? Excellent. The deal is in profit. Let's continue today's acceleration on other pairs. Attention, on the chart, Canadian dollar, Japanese yen. Here, I'm opening a short position. Yes, right now on a slight rebound. The price has clearly stalled at the upper boundary of the channel. There will be no breakout. We have time for it to trade within the corridor. So, I'll share the details with you. Analyses that significantly differ between investors and traders. Investors, in principle, are in no hurry and conduct a more detailed and comprehensive study. They will analyze the reports of various companies, take into account macroeconomic indicators, and understand cycles of the market. They also use indicators, of course, along with chart patterns, but they apply them on larger time frames, most often on weekly or even higher tasks. That is, investors aim to make one correct decision for a long period and then patiently wait for its outcome. It can also be noted that with this type of analysis, in practice, it's certainly much easier to make a mistake here, which is quite difficult. Another trade is done, friends. A nice amount on the balance. I'm already on my way to my goal. Let's move on to the next opportunities and open a couple more trades. Great, an excellent opportunity. Australian dollar, Japanese yen. I'm opening a short. I think you all can see. Breakthrough of the central channel. It can be interpreted as a decline, especially down to the support level. The price hasn't reached us yet. Excellent. Now let's talk about the trader's toolkit. You can see it basically on my screen. We have a couple of working indicators at our disposal, trading within the logic of our unified trading strategy. Right now, I'm not so concerned with the long-term trend of the Australian dollar against the yen. You see, of course, knowing this wouldn't hurt, but I'm interested in profit here and now. I base my forecast on current events, say, from the last hour. Yes, it's more risky, but the advantage of investments is working on larger time frames, while we are on short-term ones. The larger the chart, the less market noise and false signals there are. However, we justify ourselves here by the fact that I make good money when I need it. You have to do it. Open the computer, earned money, that's it. Friends, the trade is in profit, $770 on the balance. Probably already sold, trading on another pair. The payout percentage here is too low. Excellent. A good position awaits us on the pound. Against the yen. I'm opening. A long position. A long green candle, rebounding from the lower boundary. Also allows us to expect growth within the sideways range. The boundaries are visible on the chart. Friends, the culminating question. What should one engage in, trading or investing? It all depends solely on you. Let me tell you, personally, I would suggest starting with the first and then moving to the second. First trading, then investing. Or you can practice both at once, if you have the money, of course. It's foolish to refuse, let's say the advantages, of both methods when you can use them to your benefit simultaneously. It is worth acknowledging, of course, that investing small amounts, as I mentioned, will only pay off after many decades. More precisely, you will feel a noticeable growth in your capabilities and finances only after several decades. It makes more sense to earn from trading and allocate part of the profits to investments. For example, that's what I do. In this way, you can double your benefit. So, the 9th trade in a row, friends. My goal today is to make 10 consecutive wins. Let's find the final point for today. I hope everything works out for us. Let's go. Yes, basically, it's the euro dollar. Not the easiest pair to trade, but now I'm opening an option to go up. Upon breaking through the Donchian central channel, and the price has always smoothly stopped its decline, so right now we should expect a trend reversal in our favor. The shaft trend cycle is overbought. Great, while the expiration is ongoing, let's draw a couple of conclusions. Trading and investing are related, yet different things that have their place in the stock markets. Speculators. We earn here and now, constantly monitoring the price movement. Investors, on the other hand, count on long-term profit and good dividends, which are also generally pleasant. We engage in a more risky business, but we have the potential for huge income. Investors, however, rely on the steady growth of their capital. It should be noted that both methods are good, and it's not worth arguing about which one is better. It is much more logical to work with both to combine the positive aspects of each. This is what professionals do, and you should do the same. Friends, excellent. 10 trades in a row, I have reached my goal. $21.33 in the balance, wonderful. Well, as for me, everything went great. A wonderful trading session. We also discussed investments and trading with you. Choose for yourself what to participate in. The choice is entirely yours. If you liked the video, be sure to like and comment. I would really appreciate your support. Goodbye, friends. See you in a new video. Wishing you more profit, kindness, and peace above your head. See you soon. Goodbye, everyone.